So guys, today we're going to be talking about this new company that I just invested in a couple days ago. Unfortunately, it's gone up by around 50% as of today. However, I think there's still more upside. This company is a new IPO on the TSX and they play in the technology sector. And more specifically, they help with live streaming of video. I'll be right back after a few taika and we'll talk about this company called Haivision. Sit. Good girl. Yes. What's going on, you guys? My name is Daniel, and here on this channel, we talk about growth stock investing with a focus in the Canadian market. So today we're going to be featuring this new company that IPO'd maybe a couple weeks ago, early in January, called Haivision. And what Haivision does is that they're a leading provider in infrastructure solutions for the video streaming market, servicing enterprises and governments globally. I've included timestamps in this video so that you can follow along, and if you want to skip ahead, feel free to do so. So first off, I'll talk about the problem and the solution that Haivision has. So the main problem that Haivision is trying to solve is poor video quality. I don't know about you, but for me, I've definitely seen poor video quality throughout my life. There's often times that your video will freeze and a frame like this will appear on the screen. And usually the worst cases when this happens is when it's a live stream, where you can't actually go back and rewatch that video. So what Haivision's solution is they allow for a high quality video with low latency, as well as a reliable signal that's not choppy. And the signal goes through three different phases. It has a contribution phase, the distribution phase, as well as the delivery. So if we go through these three phases so you understand it a bit better, the contribution is when it's shot from the live event. So let's say there's a cameraman holding a camera and he's filming a concert. And then that feed has to go to a broadcasting station. So this is the contribution step. Then there's a distribution step. So in between the contribution and distribution, there's some mixing at the broadcasting studio. And when the distribution happens, it goes from the broadcasting station to servers around the world or just different distribution points. Because you're not streaming directly from the actual broadcasting station, you're receiving the video from data centers. The reason for this is if it was streamed directly to your phone, it just would not be an efficient use of data transportation. Oftentimes, these signals are traveling overseas, and you don't want to send a video 1 million times from the broadcasting station to a million different phones across the world. Rather, you send it once to a data center, and from the data center, what happens there is there's the delivery of the video. So the delivery of the video is basically when a data center sends this video out to the million phones that are around it. So Haivision has its hand in all three stages of this distribution of video. If we look at the total addressable market today for Haivision, it sits around $15 billion, which is, a fairly decent sized market, but not massive. If we compared Haivision to like Dye & Durham, for example, Dye & Durham's addressable market is somewhere around the $10 to $11 billion market. So Haivision's market is a little bigger than Dye & Durham's, as well as Haivision's market is also growing by 15% year over year. I've also thrown up an image of the breakdown of the revenue based on geographical area, as well as types of products that they sell. And this is broken down into hardware, software, as well as services. I called the CFO the other day to get a bit more color on how their revenue is actually broken down. And the one piece of information that I got from him is that hardware sales make up around 50% of the business, not 61%, just like the entire market is broken down. So it looks like Haivision is able to capture more revenue on their software side of the business compared to the breakdown of the market itself. This is one thing that I like to see because software is typically a recurring revenue stream, which makes it a lot more predictable going forwards in the future. Hardware sales are typically a one-off sale, so once you sell that unit, you collected the revenue for it, you don't know when your next sale will be. You have to rely on salespeople to continue selling in order to generate revenue. However, if you're providing software as a service like a monthly subscription, once you sell it once, the customer continues to pay month over month. And that's why everyone seeks after software companies, because the revenues are a lot more predictable. If you look at some of their major customers, Haivision has done gigs for Microsoft, LinkedIn, Riot Games, Sony, SAP, and NASA. Another question that I had for the CFO is whether Haivision would ever provide services for companies like Netflix or Google for YouTube. And that doesn't seem to be Haivision's bread and butter. Maybe for like Twitch and for YouTube streaming, it may be a bit of a far stretch to go there because these companies probably have their own proprietary hardware and as well as they're backed by massive giants. So my guess is that Haivision is not tackling those people who are already in the video market, but those people looking for a quick, easy video solution to deliver high quality, reliable video over the internet. Now the reason why I think this company could be a winner over time is twofold. And the reason is, if you look on social media nowadays, the video content is always the number one thing people go for. We can see that with the rise of like TikTok, Instagram stories, Snapchat, as well as we have Amazon Prime TV, Netflix, YouTube, and the list goes on and on and on. People don't care so much about like the static images on Instagram, nor do they want to go into the internet and read anymore. People like things spoon-fed to them in a somewhat entertaining way. And with the rise of video, also live streaming is becoming more and more popular. And this is where Haivision will really capitalize. Haivision was recently contracted by Riot Games to help support them in the delivering of streaming of the League of Legends tournament. And esports is also a growing industry. So the fact that Riot Games, a large player in the esports industry, used Haivision's technology to deliver video is a validation that Haivision's technology is good. Esports is attracting more and more viewers, and the viewership is growing by about 9% year over year. And if you look at the total viewership, it's in the hundreds of millions of people. And comparing that to the NBA or NFL, the viewership for that is in the tens of millions of people. So esports is massive. So if Haivision can capitalize on this opportunity and become the number one player in supporting streaming of live tournaments, then I think this could be a major opportunity for Haivision. It's not only in the gaming industry that Haivision excels, they also help with corporate events like companies doing all hands on decks. As well, they also provide reliable streaming for medical, military, and houses of worship. The second part to my thesis is the fact that Haivision also will benefit when 5G comes online. And when 5G comes online, this just means there's a lot more data that can be put through the network at a faster rate. And this will translate into higher quality video going forwards. However, you need the technology to support that high quality video, otherwise you're going to get choppy video or pixelated video. And when 5G comes online, there's probably going to be more of a push for 8K TV, as well as maybe we can get 4K streaming if it doesn't already exist yet. Haivision currently sells to a lot more larger corporations, but I think when 5G comes around, it's also going to help them reduce their costs for the technology, and they might be able to create a solution for small and medium enterprises out there. And this is a possible expansion that I see for Haivision going forwards. The fact that they've already developed the hardware to support streaming right now without 5G, they can probably create a lower end product to support the mass market of businesses that would benefit from this. These are companies probably from like 10 employees to 1,000 employees, and there's a lot of those companies out there. However, there aren't many Microsofts out there or Amazons or Google. There are a few other things that I'm going to go over now that I like about Haivision before we dive into the risks. So the first thing is, I like that they're the pioneer of SRT, which is the Secure Reliable Transport Protocol. And essentially what it is it allows data flow from the sender to the receiver to be robust. And they do this by buffering both sides. And what this means is data, when it's sent from a sender to a receiver, the data packets wait a little bit of time in a buffer before being processed by the receiver. This allows for some packets to be lost over the network and recovered, because essentially the data that goes through this buffer needs to wait a bit of time before it's actually spit out the other end to be processed and thrown up on the screen. So if there's a bit of lag time between when the receiver receives the data and actually processes it, then we can have a few packets in the buffer, and if one messes up, then there's enough time to go back to the sender, say, hey, I forgot or I lost that packet, and have them to resend it. And Haivision was a pioneer of the Secure Reliable Transport Protocol, which is now open source to over 450 companies. And I think the fact that they were the pioneers gives them a bit of credibility as well as some free advertising. When people realize that Haivision was the creator of this, it generates trust with customers, and they will rather go with the originator of the technology than maybe pay a cheaper price with a third-party vendor of it. I also like the fact that they've proved their technology in esports and gaming, because I think this is going to be a huge opportunity for them going forwards. Esports is only going to grow and grow and grow, and people even talk about esports being in the Olympics. The fact that they have the largest viewership in the world for any sort of sporting events already is something that shows me that esports is a place that you want to be in. I think that more and more events are going to come online, especially with this millennial generation or the Gen Z growing up, because we grew up in the video game age, and people love their video games still. And as these people grow up and go into industry and earn more and more money, then they're going to be the people driving the esports industry and willing to pay for the products or services that are put out by the esports industry. People who are in their 40s and 50s, they don't care about esports at all because they didn't grow up with that. And that's where all the money is right now. But eventually that money will shift to people who are right now in their 20s and their 30s. Looking at the ownership of this company, it's good to see that management has a fairly healthy stake, meaning that they're aligned with shareholders. Management currently holds about 24.7%, as well as there's 23.7% of directors who are non-employees that hold Haivision shares. 16.9% of the shares are also held by employees, and the remaining 34.7% is held by outsider institutions and retail investors. Looking at the management team, the CEO, the CMO, and CTO are actually all from the same company. It was a company called Discrete, and it was eventually bought out by Autodesk. So the fact that these three executives on the team have worked together in their previous company, as well as they've been at Haivision for like 20 years almost, gives me confidence as an investor that they're a well-oiled team and they're not just a bunch of new people coming together trying to help Haivision grow. Haivision also laid out how they plan to use the funds from the IPO that happened recently. $28 million is going to go towards acquisition, which is a very large chunk of their IPO dollars. $6 million is going towards new product development. $6 million is going towards sales, marketing, and support, and the remaining is for general corporate purposes. So I really like the transparency that Haivision has for their funds, and this is another thing for me as an investor that gives me more trust into the company. You can see that their revenues were $74.1 million, putting their PS ratio somewhere around like a 4 to 5. Also, we can see their EBITDA has been growing at 44% year over year, as well as the revenue has been growing 16% year over year. So the revenue growth isn't as good as other high growth stocks that we're looking at because 16% is roughly in line with how quickly their total addressable market is growing. However, one thing to note, as I mentioned before, they're spending about $28 million on acquisitions. And with these acquisitions, what this will do is obviously boost the revenue up at a faster rate than 16%. Another interesting fact here is that the company's been built off of $8.25 million of invested dollars. So the rest of it really was just them either taking their sales revenue and putting it back into the business and reinvesting in sales and marketing as well as product development. So with $8.25 million, and the company is worth somewhere around $400 million today, it seems like management has used their capital well and invested it quite well. The last thing that I want to point out is the fact that their gross margins are 77%. And this is something that I was not expecting, especially from the business that has around 50% in hardware sales. Usually hardware businesses, their margins are around like the 30 to maybe 50%, but the fact that they were able to pull out a 77% margin on the revenue is kind of beyond me. I wish I knew what the breakdown was between the hardware, software, and services, but right now they don't break that out. Perhaps they'll break this out in their earnings, which are happening on January 28th, when I'm actually releasing this video. So if you buy into Haivision, be sure that you look at their earnings because this is the first glimpse that we have of the company and how they're performing once they're a public company. Now moving on to the risks. One of the biggest risks that I see so far is the fact that this is a new IPO, and honestly they're not a very big company, so we don't get much knowledge as investors about what's going on behind the scenes. It's good that they have a news or press release page which actually dates back to the founding of the company, or at least back until I think 2009. So if you're really interested, you could go read all the different news articles that they've posted over the years. And this will give you a lot more color on how the business has evolved. Another thing about being a new IPO is that there's a shareholder lockup period. And once that lockup period expires, there's a lot more risk there because it's possible that the insiders or the employees will be wanting to sell at that point. And if we see a lot of insider selling, this is going to create a lot of selling pressure, meaning that the stock price will go down. Because simple laws of supply and demand, when supply increases and demand stays the same or is lowered, then price goes down. We also don't have much history from the company except for what they provided in the prospectus as well as the investor presentation. So this is another risk that you have to take into consideration when you're investing in Haivision. We don't really know what the general trend is for the business. We have a bit of an idea, but it'd be nice to know a bit more information. I already mentioned the downside of them being a 50% hardware business. The fact is that hardware is unpredictable. So this is the second risk that I see as an investor in Haivision. The last risk that I see is that it's very difficult to actually understand this market and who their main competition is. Haivision lays out their competition as a bunch of different companies. However, they play in 3 different segments of video distribution. So there's different competitors for each segment. And it's kind of difficult to understand which companies are the top dogs here and how Haivision actually stacks against them. Haivision doesn't give that much clarity on this, and in fact, when I asked the CFO, he doesn't really even have the numbers himself. So it's very difficult to determine where Haivision is. We can only go based off the big names that they have attracted, like SAP or Microsoft or LinkedIn, that they are fairly credible. But we don't know what the competition really looks like unless we do deeper studies into them. And most of these companies are smaller public companies, or they're not even public yet. I currently do own a stake in Haivision. I bought around 50 shares at a price point of around $10 per share. And honestly, I got pretty lucky with this. I didn't expect it to go up by 50%, but maybe people were buying into Haivision because earnings were coming up on January 28th. It's a new TSX IPO that's in the technology sector, and people are looking at this company like thinking, this could be the next Addressable, or the next Dye & Durham, or the next Lightspeed. So these are all the investor sentiments that I imagine that are going into Haivision right now. If you want to know in real time when I buy these new stocks, or if I'm buying more Haivision, I have a Patreon group down below, and if you want to join that community, I give you guys all my buy and sell alerts for my Wealthsimple trade portfolio as well as my Quest trade portfolio. That's all I have on Haivision today. Let me know your thoughts down below, whether you're an investor in Haivision or you're looking into the company. Also, please share your thoughts on any other things that I missed about Haivision. This is not a comprehensive review on Haivision because there's a lot more facets to the business that I've definitely glossed over, but this is a great place to start your research and just get to know what Haivision actually does. Leave a like down below if this gave you any value at all, as well as subscribe and hit that notification bell if you're new here. I've got 2 videos on the screen here if you want to check them out. They're more high growth TSX tech stocks. If you're there, I'll see you there. If not, keep up the grind and have a great day.